Hey, welcome back everyone. One of the coaches at UNGER Academy here, and welcome back to our usual chat on the strategies in our portfolio that have performed the best over the past period. As always, before we begin though, I'd like to invite you to leave us a like, subscribe to our channel, and click on that bell to stay updated on the release of all our new content, all our new videos. You won't want to miss it. Hi, we are the UNGER Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Alright, so this week I want to talk to you about gold, a market that has been getting quite a lot of attention recently thanks to the recent data about inflation. Now, as we know, this asset is supposed to be a safe haven asset, both in situations of high volatility and panic, as well as in situations of high inflation. So today, I want to introduce to you 2 mean-reverting strategies that open positions in counter-trend and close them by the end of the day. So we're talking about 2 intraday strategies. So let's start with the first one that I want to show you. Now, as I have already told you, this is a mean-reverting strategy, so it'll enter against the trend. So if the market goes down, it opens a long trade. And if the market goes up, it opens a short trade. Yeah. Now, we developed this strategy using a 15-minute time frame. So with this time frame as a reference, we wait to see a false breakout. So in the case of the long trades, we wait first for a breakout, such as this one here, of the low of the previous day, and then for a return of prices above this level. And at that time, we go long. It's kind of like saying, well, the market made a fake breakout. It was wrong in some way, so I'll enter in the opposite direction, which in this case means that I go long, and vice versa for the short. In this case, as you can see here, we wait for a breakout of the previous day's high. You see, the market broke that level, but it was a false breakout. So the market crossed under it, and we entered short. Now, this strategy has been out of sample since 2018 and is continuing to perform very well. Look in the last period. It has had an extreme upswing. Now, this market has rebounded more consistently, and this strategy has been able to take advantage of that as well. Now, the system's average trade is around $135. And this is the total number of trades. Now, let's take a look at the annual results as well. Yeah, you can see that in 2022, we're making really good profits. I mean, look at that. Profitability percentage, 80%. All right, let's move on to the next strategy that I want to show you today. It is also for the gold market and also enters at the false breakout on the lows or highs of the previous day. In this case, for the long side, we use false breakouts calculated on 5-minute bars, whereas for the short side, we use a false breakout calculated on 15-minute bars, like in the previous strategy, as they're certainly more effective. As I mentioned before, this strategy has the same trigger levels as the previous one, so it waits for a false breakout, either on the low or the high of the previous day. We can also see that this strategy too, after a period that was certainly not easy, was able to recover everything it had left behind. This was also an out-of-sample strategy in 2018. As you can see, however, in this case, the first few years of out-of-sample were not too lucky. But then in the last few months, in this time frame, the strategy returned to perform very well. This is to say that 1 year at a loss, or possibly even 2 years at a loss, does not preclude let's say, the validity of our ideas and our strategy, which if we used common sense when we developed it, surely our strategy will also work again tomorrow, as is the case with this strategy. So this strategy has an average trade of $100. Now look at the short side. The short side suffered much more in out of sample, and that's why the average trade performed badly. Let's go to the equity line. I would like to emphasize that these are results already net of fees and slippage. Additional costs have been added to the strategy to more effectively simulate, say, what could be the live. So here is the short equity line. As you can see in the in sample, it did work well. In out of sample, on the other hand, also due to these big rises in gold during this period, it definitely failed to excel. So you guys, go give it a try too. Could very well be worth it. Gold is a very liquid market that can be approached using different types of strategies, not only reversal, as we've seen today, but also trend following and bias strategies. They also perform very well. So go give it a try and let us know in the comments what you think. Now, if there's anyone among you who is interested in the world of systematic trading, I suggest that you go and click on the link in the description of this video. From there, you'll be able to watch this free presentation by Andrea Unger, or why not even just book a free call with a member of our team? Go get our best-selling book too by just covering the shipping costs. If you like the video, please be sure to leave us a like, subscribe to our channel, and click on the bell so that you can stay updated on the release of all our new upcoming videos. Again, thank you so much for watching, and we look forward to seeing you soon in our next video. Bye-bye.